Good morning, it's Steve O'Hare from Acuity Signal Centre. Today is Tuesday, the 15th of November 2022. Today's market alert is gold. XAUUSD is the mnemonic for that pair. And we're going to dive into the technical analysis, walk you through the different timeframes, and also dive into the new sentiment analysis provided by Acuity, our parent company. So let's take a look now. Here we go. Let's take a look at the weekly chart first. Now, the weekly chart is starting to become very interesting indeed. If we look at the long-term picture of gold, we do see the potential for this double top formation. You can see one high here. That was 2075. That was the high price there. That was August 2020, and also the slightly lower high formed here that came in at 2070, so only $4 or $5 less, but it forms a really lovely double top formation. Now the double top formation only becomes an actual formation when we break the neckline. The neckline is the point in between these two highs where price action breaks through. Now, also that gives us a nice opportunity to actually post a measured move target. In analysis, we look at these on a regular basis, all these types of formations, and generally we look for a measured move of the distance between the high and the neckline to project lower from the neckline. That gives us a measured move target of $1,280 in gold. So now that that neckline has been broken, we are, as far as we're concerned, this formation has now formed and we are looking for this to move lower. Obviously, at the moment we're getting a break higher from above this neckline, so we're almost retesting the theory behind the whole formation, and this is where things can get really quite exciting, because if you look at where we've drawn the most recent lows, three times we've got down to around about the 1615 level. And if we go back to January 2020, when we at the start of the pandemic and the volatility that happened there, we had, out of 7 months, we had 6 months which pivoted around this 1615 level before finally projecting higher in April. Taking a look at the daily chart, we can break it down a little bit more. We were in a bearish channel from the 2070 high. The move down, we can connect up a couple of points, maybe a third point here, and the channel below has also 2 or 3 points which became very close. So that channel, downward channel, has now broken. Prices have broken to the upside and are pushing aggressively higher. Now, this is generally based on the dollar move. The dollar was in a very long-term rally and it stalled and reversing pretty sharply. Gold is priced in dollars, so if dollar rises, price of dollar rises, it tends to impact negatively on gold. If dollar moves lower, then gold moves higher naturally. So the 3 points we've highlighted here are these lows around about this 1615 area. Now, from here, we can form a 2 or 3, well, 2 double bottoms. This double bottom here, these 2 points, a third low was posted, and that created a double bottom opportunity with this lower neckline. Now that has played out. That's hit its target. Its target was around about the 1700 level, and we now got the main double bottom formation is where this blue channel is here. That's the resistance. That is the neckline for this main double bottom. Now we'll dive into the 4-hour chart to give you a projected move higher, but just wanted to highlight a few indicators on the daily chart which will give us a little bit of a hurdle or some sort of resistance coming up. First of all, we've got 1790. That's a 38.2% fib retracement of the entire move down. We've also got this pivotal area that we've seen, which was very obvious back in May this year, and also acted as a really strong resistance August this year also. So they're the hurdles that the short-term price action or the more medium-term price action has to get over. A break of there opens up a move towards further resistance around about 1880 all the way up to 1900, which is a 61.8% fib. They're normal Fibonacci resistance levels that we see all the time in technical analysis. So let's take a look at the 4-hour chart and take a little bit of a look at this double bottom, the main double bottom that we highlighted. Neckline here, break of the neckline, projected higher, comes in at 1837. So as we say, we've got resistance. We're approaching resistance between 1786 and between 1807. Above that, the measured move target for the double bottom is up there. So that's where we're going. Gold looking pretty strong with this dollar weakness. Let's move across to the new sentiment analysis. And if we look at this, and we can see a number of alerts over the last month, and we can see how momentum, the blue line, and price has interacted. Now, very much part of the middle part of the month, momentum or sentiment really improved while price moved lower. And sometimes we get this with gold, where we have rather than confluence of price and sentiment, they seem to separate quite regularly. Now, the radial gauge up here is the last 24 hours, and we can see positive sentiment or sentiment has improved from around about 25% to about 60%. So that's good. And however, the most recent market alert has been negative, and you can see negative sell signal here that was produced 3 days ago. Daily news sentiment is moving lower, and in 60% of the last 10 occurrences, price has fallen within 2 days. And that came out there. Price has basically gone sideways since then, hasn't really fallen, dropped off a little bit, I would say 2 days later. And that's really what it was saying 3 days ago, duration 2 days. So it did sort of come off. The one that's highlighted is this, the previous market alert. Again, another 60% confident the price would move higher within 9 days. So it's a little bit more of a longer term outlook. But overall, this sentiment here, that's a 7-day exponential moving average of this indicator. And we can see that price action is really moving higher along with sentiment now. The 7-day EMA has turned positive. It's in positive territory. It's a reading of 0.0648. And also just jumping back to sort of what we've seen on the gold chart, we can see that price has moved aggressively higher, looking pretty good. If I also bring in the moving averages, we can see that the 200-day moving average also comes in around about 1805. So definitely levels to watch above. We are facing tough resistance. The rally has been very acute, very aggressive. So I do expect some sort of profit taking, maybe some short selling as we approach this 1800 to 1805 level. Yeah, so that about summarizes what we see on gold from a news sentiment and a technical analysis perspective. Hope you've enjoyed it. Hope it's helped, and look forward to catching up again next week. Take care.